Hey everybody, it is Mattie here with Altcoin Buzz with you on this Monday, and today we're talking about on Bitcoinist.com, what could one Bitcoin be worth after mass adoption? Kind of getting into a little bit of speculation here, but it's well-founded and it's based on some analysis. Then by way of Forbes, we have some updates with regards to the Winklevoss Twins. They have made, or issued, I should say, a serious Wall Street Bitcoin warning. Then if you're not familiar, on CEOworld.biz, we will be introducing you to some famous Bitcoin entrepreneurs at a top level. Of course, some of you, we realize, are always entering into this space, so it helps to provide some more 101 information from time to time. And for those of you that are hardened, grizzled veterans by now, you may already be familiar, but these are still certainly names worth knowing. Then on ccn.com, the sensational headlines continue. The Bitcoin price just did something it's never done before. Don't worry, it's not quite that dramatic, but we'll let you know what this take is all about. And then on altcoinbuzz.io, finally, we'll talk about Mimblewimble because it's about time, according to Licia, that you know, or at least have an understanding of what Mimblewimble is. But let's first have a snapshot here of the markets on CoinGecko.com. We are up 1.6% overall, 270, just under $271 billion. And at the time of this recording, Bitcoin is up 1.6% on the day, sitting at $10,358. So we are here now on Bitcoinist.com. We talked a little bit yesterday about scarcity, about the halving that's coming up in 2020. But the question here is asked, what could one Bitcoin be worth after mass adoption? Well, Hal Finney famously said one Bitcoin could be worth $10 million. And there is the issue of the scarcity selling point, which we'll get into. So over the years, many people have speculated on what the price of one Bitcoin could be if the world switched to Bitcoin. If a large amount of global wealth moves into Bitcoin, of course, the price would skyrocket. Here are some cocktail napkin calculations performed by community members trying to figure out how far past the moon we may go. Hal Finney, of course, who was instrumental in the creation of Bitcoin, made a $10 million per Bitcoin prediction, or more of a hypothetical number that he threw out there, but that was actually just days after the launch. He said the following, quote, "Current estimates of total worldwide household wealth that I have found range from $100 trillion to $300 trillion. With 21 million coins, that gives each coin a value of about $10 million. Again, that is assuming a complete switch over to the Bitcoin or at least cryptocurrency system. So the possibility of generating coins today with a few cents of computing time may be quite a good bet, talking back in 2009, of course, with a payoff of something like 100 million to 1. Definitely, irrefutably, Hal Finney was right about one thing, is that putting a few cents of computing time into coins, into Bitcoin in 2009, maybe 2010, that was definitely a good bet. Well played, sir. And then you have what's known as the scarcity selling point. One of Bitcoin's most attractive qualities is the fact that it's provably scarce. Unlike fiat currencies, which can be printed at will by the state, that's quantitative easing for you, Bitcoin has a limited supply of 21 million coins that can't be changed. Much more recently than Hal's mailing list post, others have tried highlighting how scarce Bitcoins really are, and you can take a look at what some people had to say, including Charlie Shrem and Binance's CEO Changpeng Zhao. And CZ said the following: "If you own just one Bitcoin, you are mathematically guaranteed to be the top 3 per 1,000 richest people in the world, at least in Bitcoin terms." So as the article suggests, today's hodlers of Bitcoin could be tomorrow's top 1%. Again, this is assuming a total switch over to the Bitcoin system, and that's not going to happen overnight. But I think first we got to catch up with the commodities such as the precious metals, particularly gold. We've talked about it before. Gold's total market cap is somewhere, roughly speaking, in the neighborhood of $5 to maybe $10 trillion at the highest. So once we get past $1 trillion, we can talk, but I think eventually, and you know my opinion is biased, of course, but I do believe that we're only going to grow and grow and grow from where we are today. So today's hodlers, tomorrow's top 1%, hopefully, fingers crossed. And here on Forbes.com now, we're talking about the Winklevoss Twins of Gemini fame that have issued this serious warning to Wall Street with regards to Bitcoin. And you know what? It's a pretty simple message. The Winklevoss twins have warned Wall Street banks that they've been, quote, asleep at the wheel on Bitcoin and cryptocurrencies, something that's helped Bitcoin retail investors. Quote, unlike the internet, which you couldn't buy a piece of, you can actually buy a piece of this new internet of money, Tyler and Cameron Winklevoss told CNN. Quote, it's still a retail-driven market from day one, and a lot of people have done really well. Wall Street, however, has been asleep at the wheel, the twins warned. Tyler and Cameron Winklevoss, who, as you may know, have their own history with Mark Zuckerberg and with Facebook. They have a rather contested chapter in their lives that suggests they were really part of Facebook's creation. They actually said earlier that they're open to partnering with Facebook chief executive Mark Zuckerberg on the social media giant's Libra cryptocurrency project. After it was revealed, they have been in talks about joining the Libra Association. That's an interesting twist. The newly created independent governance consortium for Facebook's planned token currently counts 28 founding members, but is expected to swell to around 100 by the time of Libra's launch next year. Yet another favorable Forbes article for Bitcoin and cryptocurrency in the books. Let us know what you think about Tyler and Cameron Winklevoss's warning to the Wall Street banks. Now, some famous Bitcoin entrepreneurs. This is really just a resource that I want to highlight quickly in case you haven't heard of some of these names. We don't have to go over them necessarily, but on ceoworld.biz, you guys can check out the stories behind individuals like we've just talked about, Tyler and Cameron Winklevoss. Tim Draper, who I always brag is my LinkedIn connection. We are buddies. Charlie Lee, the father and leader of Litecoin, of course, Roger Ver, and the big guy, or perhaps the big girl herself, Satoshi Nakamoto, where things all started. I'm sure some of you know these names. I'm sure many of you know all of these names, but if you're unfamiliar with a couple of them, hey, go into more granular detail, do some research, and check them out because they all have stories that I think are worth knowing if you're like me and you occupy this space on a regular basis. So we'll link to that in the description below. Now on ccn.com with another bit of sensational journalism. The Bitcoin price just did something it's never done before. Spoiler alert, it's not quite as dramatic as they seem to be suggesting. So in effect, we are talking about the response of Bitcoin, which flew against U.S. markets in light of all the geopolitical developments that have happened recently between the U.S. and China with talks of this trade war. So as the article points out, recent price action suggests that Bitcoin might finally be operating as a real-time macroeconomic hedge, as pointed out by economist and trader Alex Kruger, who tweeted, "Today was the first time Bitcoin reacted sharply and in real time to a trade war breaking headline or US DCNY fix." That was tweeted on the 23rd of August. And if you're not familiar with this, we did cover it a little bit the other day, but the Bitcoin price took a sharp move in the positive direction after some tweets from the president. So President Donald Trump went on a characteristic tweet storm the other day, railing against China and increasing tariffs on imports from the Asian nation. You can catch up with those tweets if you haven't seen them already. But perhaps, as far as we're concerned, what's important is that the tweets had the effect of shooting up the price of Bitcoin very sharply, as you can see here. Now, this is important for a couple of reasons. Of course, any major price movement to the positive or the negative is something that we want to cover and that we want to discuss. So number one, it's significant for that reason. But number two, and as has been pointed out by Alex Kruger, by others, and especially, I got to give it to him, Max Kaiser, these individuals have been saying that increasingly Bitcoin is seen as a hedge against macroeconomic instability across the world, including instability that is caused by feuds between nations. And I think a trade war between the US and China certainly qualifies. So whereas before Bitcoin was maybe viewed as this perhaps speculative technological investment by people that maybe really didn't understand it, now more and more it's viewed as a hedge against the currencies of the world. And I think gold has always been the dominant heavyweight in that category. But what's interesting here is that Bitcoin, in response to these tweets, actually outperformed gold in the gains that we've seen. So that's a very interesting observation, and it is significant that it's happening as quickly as it did as far as the reaction. So let us know your thoughts about in the comments below. Are you stockpiling Bitcoin? Are you buying up as a hedge against everything else that's happening in the world? To be honest, that's always kind of been my approach to cryptocurrencies. That's always been the headspace that I've occupied, but it seems more and more people are starting to think that way. So let us know your thoughts below about that. And finally today on altcoins, altcoinbuzz.io, we're taking a look at this piece. Do you know what Mimblewimble is? Because it's about time that you do. Article here by Alicia. Privacy is a critical feature of blockchain that is not always achievable, but it seems that a number of crypto projects have found the right protocol. As Alicia writes here, privacy is a major issue in the world of cryptocurrency, and of course all the projects are paying attention to that variable, perhaps more so than any other. Charlie Lee has been tweeting about this significantly over the last few months. He has notably wanted to take Litecoin in a more privacy-oriented direction, and he's been talking about fungibility. He's been talking about confidential transactions, and of course, Mimblewimble has come into that. He's been tweeting about Mimblewimble and Voldemort, and if you don't get the reference, we're going to break it down a little bit here. Some of the exposition is available for you to read, but let's get right into the main topic here. Voldemort is back in town, asks Alicia. So perhaps he has not left in the first place, because in 2016, a man called Tom Elvis Jedusor, the French name for Harry Potter's Voldemort, published the white paper on Mimblewimble. So what's so special about it? Well, some claim that its advantages include the following, and these are three big ones. Number one, anonymity. Number two, fungibility. And number three, scalability. So according to the author of that white paper, quote, I call my creation Mimblewimble because it is used to prevent the blockchain from talking about all users' information. First, the woman or the man decided to remove the Bitcoin script, and after all, Bitcoin, in spite of common belief, is not completely anonymous due to the presence of public addresses. Mimblewimble's transactions are derivatives of transactions known as confidential transactions. So in this system, solely the parties that are involved in a certain transaction know its details, and yet this system manages to prevent fraud because you can't create coins out of thin air. While onlookers do not know the details of transactions, they can still verify the input and output. So it's sort of the evolution of what was already at least a semi-private technology base, and the increased focus on privacy, as you can imagine, is very appealing to a lot of different people. So Mimblewimble allows you to merge transactions, that's known as coin joining, making it difficult for an outsider to establish who sends coins to whom. All you get to see is a list of inputs, a list of outputs, and signature data. So certainly Litecoin, which is headed by Charlie Lee, currently is the most high-profile project that seems to be considering Mimblewimble. But in this interview with Altcoin Buzz, as Alicia points out, Shahab Bezadi, platform manager for StakeNet, confessed that he also considers Mimblewimble to be highly advantageous. And particularly, he referred to the cut-through feature. Quote, we are also looking to implement the widely applauded Mimblewimble for extra privacy. And lastly, Lightning Network itself offers some unique opportunities that we are looking to take advantage of, implementing things like random hop secrets and transforming the Lightning Network funding from identifiable 2-to-2 multi-sigs into untraceable 1-to-1 standard signature transactions. So is this the evolution of blockchain? Are all things going to go in the direction of a Mimblewimble? If you're a little bit more technically inclined or you have some thoughts on the subject, let us know what they are, as always, in the comments below. But that about rounds it out for today, everybody. Do be sure you are following us on all the regular social media channels and keep checking back into altcoinbuzz.io for all the latest. Go ahead, like, subscribe, share, hit the bell to receive notifications if you enjoyed today's video. But have a great Monday, everybody, a great start to your week. Best of luck, of course, if you choose to invest, and we do hope to see you again soon in our next video. Take care.